The trend has been very weak for the last few years, but despite the gloomy outlook for the world economy, could this end up being a great buying opportunity for copper? Hello, I'm David Jones from Capital.com, and this is our latest update about what's going on with the price of copper. It has been under pressure for quite a few years. We'll take a look at it in the chart in a minute, but I do wonder if maybe we're seeing sentiment starting to turn. So in this video, I'll have a quick catch up with what's been happening recently. I'll come back, talk about the reasons why, we'll look at the big levels, then we'll get back onto the platform and place our trade for October. As usual, if you're watching and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out content like this. Let's find out quickly what's been happening with copper over the long and the short term, then I'll come back and talk about it a bit more. So let's take a quick look at what's been going on with copper over the last few years. Then I'll talk a bit more about the levels, what's driving it. We'll come back and we'll get our trade on. The story in recent years has been one of decline. You can see here from the chart, we hit a high back in February 2011, up around about 4.6, and then into 2016, the price pretty much halved and a bit more. But I think it is interesting because I do wonder, although this year's been a bit uneventful, let's flip this over to a daily chart. Are we seeing copper, building something of a base over the last 12 months, and is it about to continue the recovery that started back in 2016? This is what we're going to look at in a bit more detail in a couple of minutes' time. Then we'll place our trade. But first of all, let's talk about why it has been such a disappointing market and the big levels to look out for. So why are we seeing copper so weak? Well, it's one of the factors is what we're seeing affecting other markets, the tensions, the trade war tensions between, for example, the US and China. Because copper has so many different applications, any threat to the world economy does have an impact on the price. We've also seen in recent months that global manufacturing has slowed. We had some really negative manufacturing data out of the US over the last couple of weeks showing that activity there had hit a 10-year low. And again, that has an impact on how people feel copper may move in the future. And it is these concerns about the world economy. Just this week we had the minutes from the latest Federal Reserve meeting in the US, the US Central Bank. They cut rates and they did say that in their view, the global outlook had worsened in recent months and the risks of a recession had increased. So all of this, does weigh on markets like copper, they're seen to do well when economies are expanding. But could this still be an opportunity for short to medium term traders? We're going to have a look in a second. But first of all, let me just talk about a couple of big levels to watch out for during October. So I've got some longer and shorter term levels here. I think the first immediate barrier on the upside, it's where we rally up to in September, then run out of steam. It's up 268.50, those September highs. Because the range has been quite tight recently. We've got a couple of levels close by. The most immediate one, it's actually the low for October so far, in at 250. So for now, copper is trading between these levels. But when it comes to where it could go next and our trade for October, let's get back onto the trading platform. So we're back on the weekly chart now. We're going to set our trade up in a minute. But first of all, look at this. The trend from 2011 through to October 2016 had been down. And this trend line did a great job of stopping any rallies. We'd see the market rally up, run out of steam, and turn lower until this period here. Down in, November 2016, we finally see the trend line getting broken. So let's just zoom in on the last few years for copper. So following that break in 2016, we did see the market move higher, managing to push up to around about 3.2, 3.3 in March 2018. We then saw it sell off. It sold off, hit these lows in August 2018, around about 253. And since then, I think the tone has been one of mainly sideways trading. We've had the odd burst of excitement, a burst of volatility, but just hanging around this 2.5 level. But I am wondering if this is an opportunity. Let's pick up on that trend from 2016. So if we're looking at this from a trend point of view, that trend from the 2016 lows just below 2 did do a good job of stopping any weakness. We've seen numerous occasions where the market's pulled back to the trend line, the buyers come back in and the price has moved higher. until July of this year, and we saw it fall out of the trend line. So I think there's a couple of ways of playing this. Clearly, you can either be a buyer or a seller. Not surprisingly, you could take the view, well, actually, the price of copper has fallen out of its trend. This recovery is over. We're going to see lower prices. Another way of looking at this, and the way I'm going to look at it, is that actually, okay, we've fallen out of the trend, but we haven't seen that much of a sell-off. So for now, maybe this is just a false break. So actually, maybe it's a buying opportunity looking for the market to move back up. I think both views are valid here, but for me, I probably favour more the buying, giving it a chance to recover, because we still have, big support left back here, left back from, when is it, 2017, and again at the end of 2016, down at around about 243. So for me, I think it's an attractive trade down here, looking to see if 243 holds. Do we see a longer recovery into next year, maybe back up towards 3? But let's look at the flip side as well, because no one's got a crystal ball. Let's just zoom in on what's been happening this year. So this is why I think that you could build an argument for selling short as well. The trend for this year, since those highs in April, up just ahead of 3. We have seen the market sell off. This trend line again has done a pretty good job of holding any weakness. So perhaps if you want to short sell up here, the obvious place to have your stop, the tightest I would want it, would be above those mid-September highs, just above 2.7. But for me, I'm going to take the view, okay, we've fallen out of the uptrend line, but we're still holding above major support. I want to be a buyer. The RSI is also supporting the view. We've got a 10-day RSI down here. In August, the market slipped to, 253.70. The RSI was oversold. The market pushed lower again later in August and early September. But look what's happening on the RSI. The RSI is making higher lows. So this, when we've got the market sliding, but the RSI making higher lows, this is known as bullish divergence and can be a suggestion that perhaps the weakness is getting overdone. So if you wanted to be a buyer, there's another tick in the box for an argument that maybe we've seen the worst prices in the short to medium term. So the most aggressive place for a stop here would be under those 245 lows, and I think 246 lows. And I think actually that's the trade I'm going to do. It's quite a tight stop usually on these videos. We only do these videos once a month, but I'm going to set a stop loss the other side at 245. So give it a chance to get a bit of a move on here. But if we break below the September lows, I'm going to come out of the trade. Let's get the trade on. So we're going to go top right up here, click on buy. The first thing I want to do is put my stop loss in place. So I'm saying the other side of 245, let's put it in at 240, for example. So with a stop at 240 and the size I'm trading here, my risk is going to be £171. You can see it. If I buy now and get stopped at 240, I'm going to lose £170. On these trades, we normally risk losing a couple of £100. So let's just bump that size up a little bit. So I've bumped the size to 1350 and the risk now is around about £200. My stop is going at 240, so below that September low. That's it. Let's get the trade on. We'll click on buy. So as usual, we get the confirmation bottom left. Our trade has been opened. And if I jump back onto the chart, you can see, here we go. There's my open position, buying 1350. There's my stop loss, which is actually also beyond those lows from 2017. So there's my trade in place. To track it in a bit more detail, let's just jump into the portfolio. So we have a whole bunch of trades in here on various markets from different videos. We actually did a copper trade in September, pretty much the same sort of thinking behind it. And that's down slightly. We're buying at 262 back then, stop in a similar position. But here's the latest trade. So buying 1350 at 258 and a bit. The market is currently 258. There's our stop loss in place. There's our running P&L. And as usual, if I change my mind and I want to come out of this, I can click on close and close the trade now. But I'm going to run it because I think it is an interesting one down at these levels, because we have seen it fall out of the trend line. But we have had that bullish divergence on the RSI. 245, 242. These are big levels for the price historically. We'll see how this works out. We'll come back to it as usual in a month's time and see how the price of copper is doing. That's it for our update for copper this month. We'll be back in a month's time to see how it's performed. Of course, to never miss out on our content, whether it's copper, gold, oil, silver, all these different markets, make sure you're subscribed and just click on the alarm bell thing down there, and you get automatically notified whenever we upload new content. But for this update on copper, we'll leave it there. So from me, David Jones, and Capital.com, good luck with your trading.